name is Kristina Meno, and this is my introduction to investing. I'd like to introduce and thank my live studio audience for attending this informative speech today.
Hi. Hello.
Perfect. Thank you, guys. And now you can have your seats. All right. So let's begin. What if I told you that money really does grow on trees? Well, unfortunately, this really is a dream, but what I can tell you is that money grows on money. What I'm referring to is capital gains, and which the value of an asset moves in an upward trend. Basically, it's a big continuous staircase of money that continues to grow and build off of itself. Investing can be an essential part of seeking financial freedom and understanding that our capitalistic economy that affects our daily purchases. Today, we're going to discuss different types of investments, followed by how to profit from this process, and finally, I'll cover how you can get started today. So let's begin our discussion by taking a look at where you stand in the process. So we're going to talk about which investment suits you, and there are many ways to profit off of these assets nowadays. The main two investments that we're going to cover are investing in stocks and funds. These are the primary sources of investment that people find safest to get started with. So to begin, we're going to name a few forms of investments. We have cash, bonds, stocks, funds, and other personal assets, as I've noted. The value of money, unfortunately, depreciates over time because the products around us begin to cost more over time. This is known as inflation, in which we try to combat this by putting our money in a savings account that has an interest rate, but usually this isn't enough to offset the annual rate of inflation, which is about 2%. We also have bonds, which are company loans that are used to fund projects, and people view these as safe investments because you're going to receive a fixed amount of income in return from that company that was using the loan to fund the project. There's also stocks and shares that you can invest in. This term is used interchangeably to mean part ownership of a company that you purchase a stock in. You can profit from these stocks through either dividends or capital gains over time. Now, dividends are like little gifts from the company that like to share parts in the profits that they make, and they share these amongst the shareholders, and you receive an amount that's proportional to your ownership in a company. So now that we've already covered capital gains, but let's apply this to a scenario with stocks. So let's say you purchase a stock for $10 in company X, and they continue to grow with the economy, as we've talked about. Now, your stock value would hopefully increase with the economy as well, to the point where it could be worth up to $50 or even more. At this point, you could sell it, and you've now profited $40 in this scenario. It comes from an example by Ali Abdal from October 11th, 2020, How to Invest for Beginners, 2021. Continuing, stocks are essential. However, it's risky and unwise to invest in a singular stock, so people invest in funds. There are mutual funds and index funds, and these both represent a big pool of money that's distributed amongst various companies. Mutual funds, however, are managed by a main funds manager who decides which stocks are going to get invested in. Now, they do massive research on the market and try to get the best stocks that are going to seek the most profit, and they try to predict what financial pockets are going to explode and you'll receive the most profit from. Now, this does come at a fee of a portion of what you receive from these profits, which adds up over time and takes away from your investments. So people usually choose index funds. For index funds, the funds are applied to multiple companies through an automated system and spread across an index or a list of companies. There's the S&P 500 or the Total Funds Index. I'll talk about the S&P 500 today. It's basically a list of the top 500 companies. So if you were to invest in this, that means you'd invest your money amongst the top 500 performing companies in the US. And this is done through a passive process. You would use an app or a website to receive this receive profit through the capital gain that we talked about. Explained by Elena Taber, October 13th, 2020, Investing for Beginners, Tips for Your 20s. As you can see, the most beneficial way to begin making profit would be through index funds. However, all of these investments are an important part of expanding a successful financial profile. So you want to invest in different financial opportunities to seek the most gain. Now we've explored possible investment opportunities. We're going to go over how you can buy these shares. So, stockbrokers nowadays are available online thanks to all our technological advancements. So you would create an account and supply money and stocks through that. Primarily, Vanguard was a popular tool online that I saw was frequently mentioned for being a valuable asset in investing in assets through index funds. So it is known for having low expense rates, so they're not going to be taking a portion of your money like they do in mutual funds, and it works to generate passive income that goes through an account, like a savings account that you create on their website. They have a relatively low cost to get started. It includes a $20 annual fee. There's also, if you were to create a retirement fund, there's an $1,000 minimum for that. Best online brokers for index funds, Bazinga. Through my own personal experience, I used the app called Robinhood. They have a very simple interface, and there's no interest fees and no minimum account fees. They also were able to assign me a free stock at random when I signed up and connected my bank account and everything. So I was able to profit with literally no money even invested. I got a free stock. They do have a premium plan option, which allows you to do research and receive advice on stocks. And this comes at a pretty small fee of about $5. And finally, there's even more options to choose from. Many include sign-on bonuses for opening accounts, and usually, because of the automated format of index funds, they don't take any of your profit gains, so there's none of those interest fees. So hopefully by now you see the value of index funds and a clear path that works for your lifestyle. Not so risky, a little bit safe, and encouraging you to get started. After discovering the safest and easiest route for beginning your journey to investing, I hope you feel motivated and prepared to get started. So, if you find yourself financially stable, then consider yourself ready. First, once you begin your monetary status as solid, you're clear enough for the investment game. You obviously want to make sure that the money you're investing in stocks isn't going to be needed anytime soon immediately, since these should be long-term investments, so you give the economy time to grow and let your money tree grow. So it is advised that you make sure all of your debt is paid off. You have an emergency fund that could fund you for about 3 to 6 months if you were to run into some massive money loss, and that you don't have any other big investments coming up like a real estate purchase. Essentially, you want to be financially stable enough so that you don't have to take money out of your investments. As advised by Ali Abdal, October 11th, 2020, How to Invest for Beginners, 2021. Secondly, it's commonly noted that the earlier you begin investing, the better. They say that if you invest today, you're already behind. As stated by Melody Hobson, quote, "The biggest risk of all is not taking one," end quote. That comes from David Baki's website, June 14, 2021, Top 25 Investing Quotes of All Time. People fear the stock market because it's associated with unknown risk and not being in control of your money. It's dependent on companies that you have no real control over, but the only real way to lose money is if you buy a stock and sell it at a lower cost due to lack of confidence. People combat this through index funds accounts because you can write out the uncertainties with its passive automated process. So just get started. As you can see, if you've met the conditions of being financially secure, it's best to just take the leap. In summation, we've discussed alternative modes for investments, the effects and benefits that they can have on your life. And we completed our discussion by how you can move forward and why you should move forward with this life-changing process. So I urge you to exit this video in a minute and search the website of the broker that you saw fit best. So be bold, dare to live, and get started building your personal money tree today. Thank you.